and welcome to the Sunday edition of the Market Rag for December 16th, 2007. Had a bit of a correction on Friday, as you can see here, being down over 1.25% on all three of the majors. One interesting move we had here was the euro and oil down pretty good. Ended up being not quite 200 points on the Dow, but again, pretty ugly day out there today. As we look at our grid here for the broad market indexes and the commodities, again, the main theme here is there's a lot of yellow out here. You can see the euro and the bonds in the red, with oil just hanging out in the yellow, but in this longer time frame, a lot of green in the commodities still. The trend's basically only changed in the bonds that have dropped it down. Looking at a weekly chart of the S&P 500, you can see the sideways action we've been dealing with. We kind of came back up to the middle of this channel last week, and it seems to be rejecting it. The main thing to remember is sometimes this sideways action doesn't make sense, and that's what I'm afraid we're in for the rest of the year. The Nasdaq is still trying to hold this longer term uptrend, but starting to show some weakness here, and you can see a big dramatic difference in our highs so far. The euro finally taking a break after this dramatic run off this uptrend. Oil still chopping around this old all-time high area for it. Gold pausing and just kind of chopping around here the last couple weeks after clearing this old all-time high. The bonds look like they put in quite a head fake, breaking above this resistance, shooting up there, and now back under it. Looking at the market grid for the sectors, the only thing I can note here is the transports do have a pretty extreme high situation going on. Besides that, it's the same players. Energy's the only one really hanging in there. You can see the financials starting to fail again, along with the consumer discretionary. Healthcare's that one, and I'll show you guys a chart of that. It spiked up, which has kind of got me a little concerned. The semis have come back into this lower channel here, and as you can see, momentum's starting to decline pretty hard. This is kind of the theme of the week right here. This is telecom, and a lot of choppy action, and we put in a lot of big moves up, but they didn't stay there for very long last week. Energy is still one of the better looking areas. You've got this nice uptrend going, and again, it's real close to this prior high. If we can just get above there, we'll be looking good in the long term. Financials, trying to make that little break above our line in the sand, but we've fallen back under it. So that whole area is back on the weak side. Industrials just kind of chopping around sideways here with the overall market. Consumer staples are still trying to hold this breakout together. Wouldn't be surprised to see it come back and smell this old line in the sand here to make sure it wanted to become support. I saw a lot of these head fakes out there this week. Big moves up through resistance areas, but they couldn't hold them. They ended up coming back under and into the channel. Very common theme going on. The consumer discretions look like they have a little room here to fall before their next support area. Looking over our portfolio here, we've got just a little allocated long, and that's all in one position, our CSIQ. We were filled on our second position in our CSIQ trade. Not the best looking entry you want, but hopefully we can survive long enough. I'm going to keep this stop right where it is. Make sure that you combine the other shares from your old position with this, so you only have one order out there with all your shares. The risk, all our long is in our CSIQ, our new position, and we have just a little bit of risk here. I was able to get rid of most of that. On the closing R, we ended up a little bit on some of our shorts. I'm going to stick here with a neutral rating for a minute. We do have some X low signals, which makes me think a pop in the market isn't out of the question. Until we get out of the middle of this range, I'm not going to try to decipher too much. My best guess is we go for the lower end of the range and chop around there for a while till it decides if it wants to break it or not. We have a lot of orders to place, and they all have safe entries. I'm just trying to be positioned in case the market breaks out in one way or the other. You guys enjoy your evening.